Hey everyone, welcome back to Corporate Decoder, the place where we untangle the confusing world of corporate finance. And today we're diving into New Horizon Aircraft Ltd's latest financial report. Prepare yourselves because this company is aiming for the skies, but their financials show a bit of a bumpy ride. Before we take off, if you dig getting the real story behind company filings, smash that subscribe button. And hey, we've built a fantastic community on Discord where we break down these reports even further. Link is in the description below. Let's start with a look at their balance sheet right now. As of the 31st of August 2025, the company had about $17 million in total assets. That is more than double what they had at the end of May. A huge chunk of that increase came from cash, going from just over 7.5 million to over 16 million. That is a good sign, showing they brought in more money. On the other side of the coin, their liabilities. Total current liabilities sit at just over $2 million, which is up from about 1.3 million at the end of May. This jump is mostly due to accrued liabilities, which shot up from around 625,000 to nearly 1.7 million. That could mean they owe more money for services or expenses that haven't been paid yet, which is something to keep an eye on. Now for the income statement, and this is where things get interesting. For the 3 months ending the 31st of August 2025, New Horizon Aircraft reported a net loss of just over $10.9 million. Compare that to the same period last year where the loss was around $2.9 million. That is a significant increase in their losses, meaning they spent a lot more money than they brought in. Looking at their expenses, research and development expenses jumped from about $297,000 to over $2.7 million. That is a massive increase, showing they reinvesting heavily in designing and building their aircraft, which makes sense for an aerospace company, but it definitely impacts their bottom line. General and administrative expenses also went up from about $2.4 million to over $3.1 million. A lot of this increase seems to be from stock-based compensation, which is basically paying employees or partners with company stock. Let's dive into the cash flow statement. For the 3 months ending the 31st of August 2025, the company used about $2.3 million in cash from its operating activities. This is more cash used compared to the same period in 2024, where they used about $1.4 million. It is another indicator that their expenses are rising faster than any income they might be generating. On the financing side, they brought in over $11.2 million. That is a big jump from the $3.4 million they raised in the same period last year. A large part of this came from their sales agreement, where they sold over 3.4 million shares of their Class A ordinary stock for over $8.2 million. They also saw proceeds from warrants being exercised, which is when people who hold warrants, which are like options to buy stock, actually buy the stock, and the impact on shareholders. The basic and diluted net loss per Class A ordinary share was about 29 cents for the 3 months ending the 31st of August 2025. This is quite a bit worse than the 15-cent loss per share they reported for the same period in 2024. This means each share is now worth less due to the increased losses. Looking deeper into their shares, as of the 31st of August 2025, they had over 39.5 million shares issued and outstanding. This is a significant increase from the roughly 32.3 million shares outstanding at the end of May. This rise is a direct result of those stock issuances we saw in the financing section. It is also worth noting their warrants. As of the 31st of August, they had about 12 million warrants outstanding with an exercise price of $11.50 and another 310,000 with a lower exercise price of 75 cents. They mentioned that during the quarter, almost 3 million warrants were exercised, bringing in almost $3 million in proceeds. The company is using stock-based compensation quite a bit. For the 3 months ending the 31st of August 2025, they recorded about $194,000 in stock option expenses, and another $802,000 for shares issued for services. They also issued over 1 million performance share units, which vest based on market capitalization reaching $100 million. This shows a strong reliance on non-cash compensation to incentivize employees and partners. This section always catches my eye. The company acknowledges that while they have over $16 million in cash as of the 31st of August, which they believe is enough for the next 12 months, there is still substantial doubt about their ability to continue as a going concern beyond that without raising more money. This is a pretty standard disclaimer for pre-revenue companies, but it highlights the risk. They really need to keep bringing in cash through financings or government grants. Speaking of grants, they really banking on government support. They submitted a proposal for a $10.5 million project through Canada, S Initiative for Sustainable Aviation Technology, or INSAT. They expect to hear back sometime this year. They also received a funding agreement for $75,000 from the Downsview Aerospace Innovation and Research Centre. This reliance on grants is a big part of their strategy, but it also means their future funding is entirely in their control. Let's look at their core business. New Horizon Aircraft is designing and developing a hybrid electric vertical takeoff and landing, or eVTOL, prototype aircraft. They believe this aircraft will be used in future regional air mobility networks. They are aiming for commercialization before 2030, and their business will require a lot of investment along the way. They mentioned that the market for regional air mobility is still brand new, and there is no guarantee of future demand. This is a big bet on a future market, and the competition is heating up. They expect competitors to come from traditional helicopters, ground-based transportation, and other eVTOL developers. They believe their aircraft offers advantages like taking off and landing like a helicopter, but flying faster and at lower operating costs. However, they also acknowledge that existing aerospace companies could jump into this market, making it even more competitive. A huge hurdle for any aircraft company is government certification. New Horizon Aircraft needs type certification for their Cavorite X7 aircraft from Transport Canada Civil Aviation, or TCCA, and they had preliminary talks with the FAA in the US too. They re-partnering with Cert Centre Canada, or 3C, to help navigate this complex and potentially very long process. Failure to get certified could completely derail their plans. So, what does all this mean? New Horizon Aircraft is in a very high-risk, high-reward phase right now. They're spending a significant amount of money on developing a completely new type of aircraft for a market that is still in its infancy. Their losses are mounting. And while they've brought in more cash recently, their long-term survival hinges on securing more funding and successfully certifying their aircraft. The numbers clearly show they are deep in the development stage. The dramatic increase in research and development expenses and the widening net loss are signs of that investment. They're essentially fueling a future vision with current cash, and that is always a gamble. The big question for investors is whether they can bridge the gap between now and when this regional air mobility market really takes off. The company itself admits there is substantial doubt about their ability to continue operating long-term without more capital. This isn't a company for the faint of heart, but for those who believe in the future of electric air travel, it might be an exciting, albeit risky, opportunity. Their success is tied to technological breakthroughs, regulatory approvals, and a massive, unproven market. Alright, that is our breakdown of Horizon Aircraft Ltd's latest financial report. What is your take on these numbers and what they signal for the company's future? Do you think they can navigate the challenges and capture a piece of the regional air mobility market? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord community linked in the description down below. Thanks for watching, see you next time.